Yo, what's up you guys? Welcome back to another video. Today we're going to take a look at the market from both a technical and a fundamental perspective. And without any further ado, let's get straight into it. Last week we obviously saw we had some consumer confidence and the PMI. I do want to just focus your attention on Jerome Powell's comments on Friday. He did say that there were talks of cutting rates premature and says more hikes could happen. However, the remarks gave some credence to the idea that the Fed is at least done hiking interest rates for this year since March 2020 and had cut into the economy. Powell noted that inflation is moving in the right direction. So he finally admitted that. He says the markets largely took Powell's comments as dovish, with the stock market up and the treasury yields down. Remember this, right? Low interest rates or no interest rates will always have a negative impact on the index. The dollar index is negatively correlated with the stock market. As the prices of the stock market increases, the price of the stock market will decrease and vice versa. The treasury yields is an indicator used by investors to determine whether or not the Feds are going to hike the interest rates or not. With treasury yields being down, there's a far less sense that the Feds are going to hike the interest rates at their next meeting on December the 13th, where the Feds are not expected to hike the interest rates there as well. Pullback is expected in the market. Price action played out perfectly. If you remember the last breakdown I did, I said we can expect that pullback to the upside. The market came and tested support. Market started to rally to the upside. Market broke below support, came back, tested it as resistance. We do expect that move to the downside. This does look like a 78.6 pullback if you take your Fibonacci from the high to the low. Yep, and there we go. We had a 78.6 pullback. Now, there is a high possibility, keep in mind, there's a high possibility that the market can continue lower from this level over here. But it's very important that you wait for bearish confirmation on this market. We are trading in bearish territory short term, so there's nothing wrong with looking for sells in this market, right? So just make sure that you have clear confirmation that we are in a bearish market. But this is what I'm expecting to see going into the new week. The NASDAQ's yet to break out. We can see the market broke above resistance, came in there since November the 20th, and it basically still didn't give us any indication. But we are moving towards festive season, so I do expect the break to the upside and not to the downside. The Dow Jones has been breaking barriers. If you go slightly left over here, we can see the market is about to approach a structure where we can expect a U-turn. The market also broke above the strong level of resistance, and once resistance gets broken, it becomes support. Into the new week, I would like to see the market push higher and then start that move to the downside. If you ever feel like you can't trade, just remember there's a trader out there who's very experienced, who says he's very experienced in macroeconomics, who said that the stock market was going to crash in 2023. And if you didn't know that, you need at least a 10% bearish move in a short period of time to determine a stock market crash. And the way it looks now, it doesn't look like we're going to crash. So keep going, don't quit, because you're probably smarter than some people out there. Next up, we've got gold over here, right? Gold is trading at an all-time high. You can see here we are closed on $2,071 on Friday, which is the highest that it's ever been. Gold is definitely going to continue to rally that move to the upside. A pullback is expected, a market correction is expected. That I would like to see the market do earlier rather than later. And then we've got the S&P 500 here. We can see we're about to approach this resistance level over here. The market also broke out of this consolidation. Some will call it a lollipop. Some's going to say, pay me 3,000 and I'll show you how to do this. And then we can expect that move to the upside, then a pullback. And then next up, we've got the German 30. German 30 is also a stock that had rallied very bad. I almost said badly, very goodly. And then we obviously got the market that's approaching resistance, also broken above very important key structure that we can expect the market to come and test, but we need to see a clear move to the upside before getting this pullback in the market there as well. That is it from my side. Thank you for your time, and as always, cheers for years.